This company's stock price is 11% up today from yesterday's closing levels in such a bearish market. And it has also recently announced its quarterly results with 60% increase in their PAT. Stay tuned for knowing the company name in the later video. Hello and welcome to another series of Noisemaker, where we cut through the noise to uncover the hidden gems in the stock market. I am Bhumika Jain, Equity Research Associate at Desvelado Advisory, and through this series of Noisemaker, we dive how SMEs are making waves that could shape their future growth. So without further ado, let's get started. This video is only for information purposes and do not constitute any buy or sell recommendation. Please conduct your own research before making any investment decisions. So we have shortlisted 3 stocks: NRB Bearings Ltd, India Glycols Ltd and Himatsingka Seide Ltd. First company, NRB Bearings Ltd. This company is specialized in the manufacturing of needle roller, ball and roller bearings. Now what is needle roller bearings? It is a type of component, automobile component like pumps, compressors, transmissions. So this company is indulged in the manufacturing of these needle rollers, which serve automobile and mobility sectors. Its bearings are used in over 90% of vehicles on Indian roads. Recently, this company has reported a revenue of 9% growth with a PAT 60% QOQ growth. This indicates the improved operational efficiency and profitability of the company, which indirectly enhance the company's overall financial health. Coming to more of the in-depth financials, since it is a manufacturing company, EBITDA margins are very important. So 13% growth in EBITDA margins and 32% growth in their net profit margins. Talking of the share price, its share price have given 98% return in a time span of 2 years. Next company, we have India Glycols Ltd. This company is engaged in the manufacturing of industrial chemicals such as green technology based bulk, specialty and performance chemicals, and natural gums and industrial gases like ethyl alcohol, which is potable, and nutraceuticals. Recently, this company has announced the incorporation of a wholly owned subsidiary proposed as IGL Spirits Limited. It is proposed to expand its business in the spirit business. The company has invested 1 lakh by subscribing 10,000 equity shares, holding 100% ownership in the new entity. This move aligns with the IGL's strategy to diversify in new sectors, which will indirectly enhance its overall revenue streams and strengthen its market position. Talking of the future outlook for the company, company has a positive outlook for growth in biofuels and specialty chemicals, which is driven by government support for ethanol blending. There is 60 crore spent on capex in the first quarter of FY25, with the expansion planned for Kashipur and Gorakhpur plants to increase the ethanol production. New value-added chemical products are also targeted to generate 150 to 200 crores revenue in FY25. Talking of the financials, there is 1% decline in revenue growth QOQ. However, EBITDA margins is at the same level at 14%, and net profit margin has declined by 6% from the previous quarter to 5% in second quarter of FY25. Talking of the share price, there is 55% growth in share price in the span of 2 years. Finally, next company, Himatsinka Seide Ltd. It is a leading global textile company specializing in the design, development, manufacturing and distribution of a wide range of home textiles, with one of the largest installed capacities of bedding, bath and upholstery products. This company manages a portfolio of over 12 global brands, including licenses for iconic names like Calvin Klein, Tommy Hilfiger and Kate Spade. Recently, this company has invested 5.73 crores to acquire an additional 72,24,900 equity shares for AMP Energy and CNI 24 Private Limited, now holding a total 47.3% stake in the renewable energy firm. This particular acquisition is a part of Group Captive Power Scheme, which is aimed at meeting the energy requirements of Himatsinga plants sustainably. Talking about the future outlook for the company targets 1000 crore contribution from the Indian market over a span of 5 years. It also aims to continue its foray in the Indian market initiated at quarter 4 of FY25 and expecting EBITDA contribution from India to be in the range of 18% to 20%. This company is also targeting to increase the utilization levels to over 90% within 12 to 18 months. Coming to the financials, the company has achieved 252% revenue growth QOQ in the second quarter of FY25. However, its EBITDA margins have declined by 6% QOQ and net profit margins are stable at 3%. Talking of the share price chart, it has given a return of 64% in a span of 2 years. That's it for today. In case you missed on any information in the Noisemaker, you can refer to the PDF in the description below. Thank you.